Welcome back to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today, we're diving into BlackSky Technology, ticker symbol BKSY. And this is a company that's really trying to reshape how nations and major commercial players gather intelligence from space. We put together a huge stack of information for this, their Q3 2025 earnings, analyst reports, technical breakdowns, everything we need for a proper deep dive.
And our thesis today is, I think, really clear, built right from that material. It defines the core tension here. BlackSky is executing a strategic pivot from low-frequency static mapping to dynamic monitoring, utilizing its Spectra AI platform and the Gen-3 Constellation to unlock a $322.7 million backlog dominated by international sovereign intelligence contracts. So this investment thesis, it really balances that compelling long-term international demand against some very real near-term execution risks tied directly to satellite deployment, and of course, the persistent U.S. government budget volatility.
That's a perfect way to frame it. You have this incredible promise, right?
Mm-hmm.
Cutting-edge tech, high-margin revenue that should be really sticky.
Mm-hmm.
But it's all pitted against the reality of, actually building out a space fleet and navigating these totally unpredictable government budgets.
Mm-hmm.
So if we want to define the risk, we have to start with the reward. We have to understand their core tech.
Right.
We have to establish their competitive advantage. Because when you look at the satellite imagery market, the first thing people think of is resolution.
Yeah.
How sharp is the picture?
Yeah, that's the common mistake.
But BlackSky is saying their moat isn't the hardware, it's the software. It's the insights.
That differentiation is absolutely essential. If you just see this as a race for better resolution, you're missing the whole point.
Yeah.
BlackSky is selling insights, and they're selling them at speed. Not just pictures.
Okay.
The analogy from the sources was great. Think of their old Gen-2 satellites, like standard security cameras. They captured the scene, gave you historical context.
Right, what happened yesterday?
Exactly. But the new Gen-3 system, paired with their Spectra AI, that's like a high-definition AI-powered forensic camera, it automatically flags the moment something changes and tells you where to look. They're moving the whole industry from just photography to actionable instant intelligence.
Okay, let's unpack that forensic camera brain. You called it Spectra AI.
Yep.
What is that platform actually doing that gives them this edge? Why can't a competitor just, copy it?
Spectra AI is without a doubt their primary technological moat. It's an AI-powered software as a service, a SaaS platform,
right?
And it's basically the central nervous system for their entire operation. It's not just managing the satellites, it's integrating these huge diverse data streams in real time.
We're not just talking about a few sensors here.
Oh, not at all. But the platform is constantly ingesting a colossal amount of data. We're talking 1 million plus observations per day.
1 million a day.
Being fed into the system from over 100,000 different sources.
100,000 sources. That has to be more than just satellite photos. What kind of data are we talking about?
It's the full spectrum. It's what they call multi-INT, multi-intelligence. You have open source news, seismic sensors, social media traffic.
Social media? Really?
Absolutely. Also AIS data for tracking ships, flight transponders, weather patterns, and yes, imagery from their own and partner satellites. But the key here is correlation. The system is built to consume every single scrap of relevant data, find the links between them, and then boil it all down to a few actionable signals.
So it's not just data collection, it's intelligence synthesis, finding the signal in all that noise.
Precisely. And that leads to their core operational innovation, which is the automated tip and queue tasking.
Okay, that sounds like jargon, but I'm guessing it's critical. Walk me through it. How does all that data turn into an action in space?
So the tip and queue process is a world away from traditional satellite tasking. Historically, an analyst reads a report, thinks something is happening at, say, a port. They manually put in a request for a satellite image.
And it goes into a queue. Could be hours, days even.
Exactly. With Spectra AI, it's autonomous. The AI detects an event. Let's say it sees a correlation between an alarming news report and a big spike in maritime radio chatter near a facility.
That's the tip.
That's the tip.
Yeah.
And the AI instantly translates that tip into a command. It adjusts a satellite's trajectory to cue the camera, and it snaps a high-res image of that exact spot right then.
So it's completely bypassing any human bottleneck.
Yeah.
The AI is making tactical decisions about where to point these incredibly valuable assets in real time.
You got it. For a defense client tracking a crisis, you can't wait 12 hours.
No.
The speed metric is everything. It's what
Yeah.
sets them apart. They consistently deliver actionable imagery and the analytics on top of it to the customer in under 90 minutes on average.
190 minutes. I mean, compared to historical standard, that's basically real time.
It is.
It totally changes what you can do with the information. You're not looking at what happened yesterday anymore. You're seeing what is happening right now.
And that speed, that sub 90-minute latency, that's the foundation of their whole philosophy. Dynamic monitoring. Without that speed, they'd just be another static mapping company.
Okay, so let's pivot to that. We've got the tech moat, the AI, the operational model that it enables. Dynamic monitoring. This is their big move away from what you called static mapping.
Right, and the contrast is really stark. Static mapping, which is what a competitor like Planet Labs does, is about capturing a full picture of the entire globe, maybe once a day. They typically use what's called a sun-synchronous orbit, so they fly over the same place at, say, 11 a.m. every day. Keeps the shadows consistent. It's great for making maps or tracking slow changes like deforestation.
It's like taking a daily global census photo.
Perfect analogy. BlackSky's dynamic monitoring is the opposite. They don't care about mapping the whole world once a day. They want to monitor specific, critical assets multiple times per day. Static mapping is the daily newspaper. Dynamic monitoring is the breaking news alert that hits your phone.
And they get that frequency by making a very deliberate choice about their orbit. They're not on the same highway as everyone else.
No, they chose a specific regional superhighway. They use a mid-inclination orbit, flying between 53.5 degrees north and south latitude.
Why that specific slice of the Earth? 53.5 degrees.
Because that's where everything important happens. That band covers the world's critical trade routes, industrial centers, and geopolitical hot zones. It's a strategic choice. That trajectory covers the area where 90% of global GDP is generated.
So they're avoiding the poles where there's less activity.
Right. They concentrate their satellite capacity exactly where their customers need it most. It's a really smart use of capital.
So it's not about maximizing coverage, it's about maximizing relevance. What kind of revisit rate does that give them over a high priority target?
This is the key. It's the highest frequency in the commercial market. They can provide revisits to a single target up to 15 times a day. From dawn until dusk, that's a paradigm shift. It lets a client build a forensic, hour-by-hour record of activity at a location. You just can't do that with the traditional once-a-day system.
Let's use an example from the source material to make this real. The most compelling one was about pattern-of-life anomaly detection. This is where the AI really shines.
Yeah, the Haneda Airport case study is perfect. The Spectra AI monitors the airport constantly over long periods, just mapping normal activity. It builds this objective baseline of what's normal. Think of it like a heat map. Red parking spots are normally full of a certain type of plane. Green spots are normally empty.
So the system isn't just counting planes, it's learning the expected behavior for every single spot on the tarmac.
Precisely. Its main job is to detect deviations from that pattern. And in the reported incident, it spotted a cargo plane parking in a spot that's only ever used for passenger jets. A spot that should have been green suddenly went red with the wrong kind of signature.
And that's the alert. That tiny anomaly, detected autonomously, goes straight to an analyst.
Right.
It saves them from having to sift through thousands of routine images to find the one thing that's wrong.
It turns this overwhelming fire hose of visual data into a single prioritized alert. And that capability translates directly to high-value commercial uses.
Right, like supply chain monitoring.
Mm-hmm.
This is where you get into providing signals for hedge funds or commodity traders.
Absolutely. They do a lot of sophisticated naval and port monitoring. For example, they can calculate the berth occupancy rates at key ports, like Port Hedland in Australia.
Giving you real-time data on iron ore exports.
Before any official reports come out, it's a powerful predictive indicator. And the AI can even track targets that are trying to hide.
A dark target, one that's turned off its transponder.
Right. So if a customer needs to track a dark barge, the AI can track the nearby tugboat that is transmitting its location. The tugboat's location becomes the tip, and it automatically cues the satellite to take a picture just as it enters a specific port. And boom, you get visual confirmation of the cargo.
It's acting more like a digital private eye than a camera operator. It really seems like they're building the business around this high-margin analytics revenue.
That's a strategic play. Management's own estimate is that the total addressable market for analytics insights is anywhere from 5 to 50 times larger than the market for just raw data.
That's a huge range, but the point is clear. The big money is in the analysis, not the picture.
And their margins show it. They're targeting gross margins over 80% long-term for this part of the business. You can do that when the data is proprietary and the AI is unique.
So what are some of those proprietary products they're selling?
A great example is 3D surface generation using stereo imagery. A Gen-3 satellite can take multiple pictures from slightly different angles as it flies over.
Which lets you build a 3D model.
A very precise digital elevation model. This is huge for industrial monitoring. Think about monitoring mine tailings dams for safety, where tiny elevation changes are critical.
Or calculating volumes.
Exactly. They sell products like coal volumetrics at storage sites, or they measure the shadows on oil storage tanks to estimate inventory levels. These are high-value, quantitative intelligence products.
It's fascinating. You're not selling a picture of a tank. You're selling the number of barrels inside it.
And there's another one, non-Earth imaging, or NEI.
So imaging other things in space.
Yes, space domain awareness.
Yeah.
When their satellites are over the dark side of the Earth and not busy, they can be tasked to image other satellites. It's highly valuable for defense clients, and they just renewed a multi-year, seven-figure contract for that specific capability. It's a recurring revenue stream using otherwise idle capacity.
Okay, we've got the tech, we've got the high-margin business model. Now let's talk about the money and the geopolitical shift that's driving all this. We need to focus on this move away from the volatile U.S. government to this accelerating international demand.
The momentum right now is all anchored by their contract backlog. The headline number is $322.7 million as of the end of Q3 2025.
That's a big visible revenue stream.
It is, but the composition is what really matters.
Which is?
91% of that backlog is international.
Wow.
That's a crucial de-risking factor. It's recurring revenue that's less susceptible to the annual budget chaos we see in U.S. government procurement.
And that's the result of a really dramatic shift in their customer base, isn't it?
It's been seismic. International customers now make up 50% of their total revenue. A year ago, that number was only around 40%.
So the international business is growing much faster.
And that trend is expected to continue. It's very likely that international revenue will outpace U.S. government revenue and become the clear majority in 2026.
Okay, I have to play devil's advocate here for a second. The U.S. government might have volatile budgets, but its credit is rock solid. If 91% of your future revenue is tied to other countries, doesn't that introduce a whole new set of geopolitical and financial risks?
That is a very valid point, and it's a key risk for any investor to consider. But the source materials suggest it's mitigated in a couple of ways. First, these sovereign intelligence contracts are strategically critical to the nations buying them. They're essential budget items, not discretionary spending.
Okay.
And second, the customers are often major growing economies, particularly in Asia and the Middle East. They have the money, but they lack the decades of space heritage the U.S. has. They're looking to catch up fast.
Let's define that sovereign intelligence model. This is where they're bundling everything together for a foreign nation.
That's their sweet spot. These are multi-year, multi-element deals. They often include hardware like dedicated satellites bundled with long-term subscriptions to the data and the Spectra AI platform. A country can essentially bypass decades of slow development and buy an instant state-of-the-art intelligence capability right off the shelf.
And they're winning big contracts with this model. What are the key wins we know about?
The traction is really clear. They landed a multi-year contract worth over $30 million with an international defense customer for these high-cadence Gen-3 services.
And it's not just one country.
No, the geographic spread is what's telling. They have confirmed deals with growing space programs in places like Indonesia and India. These are nations that are rapidly expanding their defense needs, and BlackSky offers a cost-effective way to do it.
So the analyst's take is that these international customers are speeding up their buying cycles.
Yeah.
And they're choosing BlackSky over, say, a traditional defense giant because of the economics.
Exactly. The Gen-3 system offers superior capability at a fraction of the price. Management estimates their satellites cost only 10–15% of legacy competitor costs. For a nation looking to build out space awareness quickly, buying the full stack as a managed service is a no-brainer.
This is a huge opportunity.
Yeah.
But, like we said in the thesis, it all comes down to execution, which brings us to the catalyst and the risk.
Yeah.
The Gen-3 deployment.
Yes.
That entire $322.7 million backlog is basically locked up until those new satellites are in orbit and working.
This is the absolute crux of the challenge. If the satellites don't launch on schedule, the revenue do not flow. The international customers are paying for Gen-3 capability, not the older Gen-2.
So let's detail the Gen-3 hardware. What's the big leap that unlocks these multi-million-dollar contracts?
It all comes down to capability. Gen-3 provides 35-centimeter resolution imagery.
Okay.
Now, BlackSky markets it as comparable to 25-centimeter class because of their processing, but that 35-centimeter native resolution is a huge tangible jump from Gen 2.
In practical terms, what does that mean for a defense client? Why is that centimeter difference worth so much money?
It enables advanced missions, specifically tactical ISR intelligence, surveillance, and reconnaissance. With 35-centimeter resolution, you can classify objects as small as 40 centimeters wide. That's not just an abstract number.
Right.
It means you can tell the difference between an armored personnel carrier and a regular truck. You can classify specific types of ships. It moves you from just general monitoring to specific target identification.
Which makes the Gen 3 deployment schedule the single most important catalyst for the stock in the near term. What's the target schedule?
The big goal is to have a baseline of 12 Gen 3 satellites in orbit by the end of 2026. That's what they need to deliver that global 15 times a day revisit rate. Management was initially very aggressive, aiming for 6 operational by the end of 2025.
And where are they now as of the Q3 report?
Well, currently only 2 Gen 3s are operational. They launched in February and June of 2025, so they're clearly behind that initial aggressive target. And that introduces this execution delay risk that investors have to be watching.
And there was a specific reason for that delay mentioned on the earnings call.
There was. Management said they found a faulty component on the next satellite in line for launch during final testing.
Okay.
They were quick to say it was a non-systemic issue, meaning not a fleet-wide design flaw, but, finding it, replacing it, retesting everything that caused the schedule to slip.
And even if it's a one-off issue, any delay has financial consequences when your revenue is tied to those launches.
It's the biggest single risk they face. Analysts are warning that if these delays continue, full revenue recognition from that big international backlog could get pushed out maybe into 2027.
A 6 to 12-month revenue slide is a huge deal for valuation models.
It is, which is why every single launch attempt is going to be a major inflection point for this stock.
And on top of that hardware risk, you have the U.S. budget headwind, the very thing the international backlog was supposed to insulate them from.
That's the anchor that keeps pulling on the U.S. side of the business. The EOCL contract reduction from the NRO that resulted in a $4 million revenue cut in Q3 2025 alone.
So for listeners, the NRO, the National Reconnaissance Office, is the main U.S. spy satellite agency. The EOCL is their big contract for commercial imagery.
Right. And that $4 million cut means that because of budget gridlock in Washington, the NRO just used less of BlackSky's services that quarter. It's not about the quality of the product. It's a direct result of the U.S. fiscal mess.
And it's not a one-off problem.
No. Management was very clear that they expect this budget headwind to continue all the way through Q2 2026, which puts even more pressure on the international side to perform while they get this Gen 3 Constellation up and running.
Okay, let's put it all together for the final verdict. We have this spectacular upside, right? Proprietary AI, huge global demand, high-margin analytics, but we have serious tangible risks with deployment and the U.S. budget.
Before we get to the verdict, we have to look at the mitigating factors. The company knows these risks exist, and they've taken steps to manage them.
Starting with the balance sheet, they have a lot of liquidity to weather these delays.
They do. They have over $200 million in total liquidity, including cash and unbilled assets. That's their insurance policy. It's a big financial cushion that lets them handle unexpected expenses like the $7 to $8 million cost of a single launch without running out of money before the backlog revenue really kicks in.
And the other big move was vertical integration.
Yes. The acquisition of LeoStella in November 2024, which is now BlackSky Satellite Systems. This was a profoundly strategic move.
It gives them control over manufacturing.
Complete end-to-end control over the Gen 3 design and production. This is how they ensure those disruptive economics, that 10-15% of legacy cost. They had to take control of the supply chain to hit the volumes they need.
But that integration came with a short-term financial hit, didn't it? Something the market didn't like.
It did. It's important to look past the headline numbers here. The acquisition caused a temporary $9 million drag from overhead expenses in the first 9 months of 2025. If you strip out that drag and the NRO budget cut, the underlying business actually looks much healthier. It suggests the core model is sound as long as they can successfully scale up.
So liquidity and cost control are the mitigants, but the big variable is still the hardware. What's the primary execution risk going forward? What's the one metric to watch?
It's still the high risk of launch and deployment delays. Investors need to be tracking one thing: the number of Gen 3 satellites successfully launched and commissioned. If they lag behind that target of 12 satellites by the end of 2026, the revenue from that backlog is going to slide into 2027. It's that simple.
So the stock is really a pure play on execution for the next, what, 4 to 6 quarters? Which brings us to the financial trajectory they need to hit.
Success depends entirely on the conversion of that backlog. They need to accelerate it through the end of 2025 and all of 2026. The long-term targets are incredibly ambitious: 20–30% annual revenue growth and 40% plus adjusted EBITDA margins. The market is waiting to see if they can bridge this current gap to hit those high-margin targets.
So it's a company in a full-blown transformation. They're moving from just proving their tech works to scaling a global intelligence business. They are definitely at the surveillance frontier with their AI-first approach and that low-cost hardware.
That's the most succinct way to put it. The market, I think, is pricing in only moderate success right now. Their valuation is below competitors, even though their tech is arguably superior in terms of speed. Investors need to see concrete proof. They need to see those Gen-3 launches happening on schedule and that international backlog converting to real revenue. The next couple of quarters are absolutely critical.
The real game changer here is BlackSky's ability to bundle its AI and high-frequency monitoring into these ready-made sovereign solutions. They figured out how to make high-end space intelligence accessible to new global customers almost overnight. So the final provocative question for you to think about is this. If global defense budgets keep rising, how quickly does sovereign space-based intelligence become a non-negotiable for every major nation? And which emerging countries will be the next to buy this entire technology stack just to catch up?
Risk defined, portfolio protected.